Hey, it's Clay Trader, and this will be a video chart on ticker symbol AKER. We'll take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Been doing this analysis on a pretty routine basis. Did it yesterday, and that's where these green and red line annotations are coming from. But this is also where the first update comes into play, and that update is based on a foundational rule in charting which states when levels of support are broken and closed below, they tend to act as resistance. So for those of you that did watch the video from yesterday, hopefully remember me talking about 40 cents as that level of support. But now that the price is broken below it, as the rule states, you would expect it to act as resistance. And that has actually already played out a little bit here. You can see when it immediately fell below it, a couple of times right afterwards, the price did try to get back up above it and just couldn't quite push through. So 40 cents, still definitely that, near-term level of resistance now, if the price is going to make any sort of upwards move and kind of get back on the trajectory that it was at. And on that note, there's nothing wrong at all with prices pulling back. No price can go up and up and up. But there does reach a point where it's like, all right, the price is pulled back enough. It's time for the bulls to start to show back up. It's time for the price to start to stabilize. And the chart has definitely reached that point. Again, no price can go up and up and up without ever taking a break. And, pullbacks need to happen. But pullbacks can eventually lead to something where it's like this, where I'm not going to say the entire chart's ruined because the price is still up above the long-term moving average right there, the 200-period simple moving average. However, like I said, it reaches a point where, the pullback has reached, an area where it's like no more pullback is needed. And that's where this chart is. So kind of what I'm trying to get across there is let's just start to see the price. I'm not saying it's got to bounce up to 55 cents tomorrow, but let's start to see some stabilization here. Because if that doesn't happen, that's, starting to be, a signal that the bears are gaining quite a bit of momentum. So going forward, 33 cents after today's price action, you can see on 2 separate occasions, the bears try to press down through there. But to give credit where credit's due, the bulls did hold strong, and you definitely want to see that going forward, because in the event 33 cents doesn't hold, then, there's really nothing else stopping it from at least going down and retesting that long-term moving average there at the 200 period. So, but 33 cents is holding, and you definitely want to see that happen going forward. But yeah, it's time for the price to stabilize, so we'll see if the bulls can get that job done or not. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.